What's up, everyone? My name is Chris. I'm a former engineer who was able to retire at 34 thanks to my investments, and my goal with this channel is to pass on my knowledge and help you get on the path to financial freedom. Today, we're talking all about exchange-traded funds, or ETFs. ETFs have become increasingly popular in recent years, with investors seeking a simpler, more diversified way to invest in the stock market. In this video, I'll take a closer look at what ETFs are, how they work, the advantages and disadvantages of investing in them, and I'll share the top 10 ETFs that people are investing in today. But before I move on, I have a favor to ask. See that like button right there? Yeah, it wants you to hit it. And so does that subscribe button. They want you to hit them as hard as you possibly can. So do it. Hit them. Hit them now. No, seriously, hit them. Awesome. Doing that helps me and this channel so much, so thank you. Alright, let's get it started. What are ETFs? An ETF is a type of investment fund that holds a basket of securities, such as stocks or bonds. It's similar to an index fund, but with a few key differences. Both ETFs and index funds are designed to track the performance of a specific index, such as the S&P 500 or the Dow Jones Industrial Average. Both provide investors with a diversified exposure to a broad range of companies and industries. But ETFs trade on an exchange, which means they can be bought and sold throughout the day at market prices, just like a stock. Index funds, on the other hand, are priced at the end of each trading day. Another difference is that index funds typically require minimum initial investments in the thousands of dollars, where ETFs don't. With today's low barrier to entry, you can buy fractions of ETFs with just a few bucks. That's part of what makes ETFs so popular. How do ETFs work? ETFs are designed to be as simple as possible for investors to use. When you buy an ETF, you're essentially buying a basket of securities that are included in the fund. This means you're getting exposure to a variety of companies and industries rather than just one individual stock. Because ETFs are designed to track an index, their performance is typically tied to the performance of that index. So, if you invest in an ETF that tracks the S&P 500, for example, you'll see returns that are similar to the overall performance of the S&P 500. Here's an overlay of the S&P 500 and VOO, Vanguard's S&P 500 ETF. You can see the similarities. One of the biggest advantages of investing in ETFs is their simplicity. Unlike individual stocks, which require extensive research and analysis to identify good investment opportunities, ETFs provide investors with diversified exposure to a broad range of securities. Another advantage is their low fees. Because ETFs are designed to track an index, they have lower expenses than actively managed mutual funds. This means investors can save money on fees over the long term, which can add up to significant savings. Finally, ETFs are highly liquid, which means they can be bought and sold throughout the day at market prices. This provides investors with more flexibility in their investing strategy, as they can quickly buy or sell shares as market conditions change. While ETFs offer many advantages, there are also some potential downsides to consider. One is that because they are designed to track an index, they may not provide the same level of returns as an actively managed mutual fund. Another potential disadvantage is that ETFs can be more volatile than individual stocks, as they are affected by the performance of the entire index. This means that if the stock market as a whole experiences a downturn, the value of an ETF could decline significantly. Finally, some investors may find the sheer number of ETFs available overwhelming, making it difficult to choose the right one for their investment goals. But that last disadvantage is why I'm making this video. I'm going to take the guesswork out of ETFs and share the top 10 ETFs that you should be looking into. So, without further ado, let's take a look at the top 10 ETFs according to Assets Under Management, or AUM. Coming in at number 10 is the iShares Core US Aggregate Bond ETF, ticker symbol AGG. This ETF from iShares by BlackRock provides exposure to the entire U.S. bond market, including treasuries, corporate bonds, and mortgage-backed securities. This ETF has $86.6 billion in assets under management, an expense ratio of 0.03%, and average annual returns of 1% over the last 10 years. Number 9 is the Vanguard Total Bond Market ETF, ticker symbol BND. This ETF also provides exposure to the entire U.S. bond market, except this one's from Vanguard. The expense ratios and returns are exactly the same. Vanguard is slightly more popular with $89 billion in assets under management. At number 8, we have the iShares MSCI EAFE ETF, ticker symbol IEFA. This ETF provides exposure to international developed markets in Europe, Asia, and Australia. This ETF has $94 billion in assets under management, an expense ratio of 0.07%, and average annual returns of 5.4% over the last 10 years. At number 7, we have Vanguard's Value ETF, ticker symbol VTV. This ETF tracks the performance of the CRSP US Large Cap Value Index. Here's a look at some of the top holdings of VTV. Some high-quality US companies. The ETF has $103 billion in assets under management, an expense ratio of 0.04%, and average annual returns of 11.5% over the last 10 years. At number 6, we have another international ETF. This is the Vanguard FTSE Developed Markets ETF, ticker symbol VEA. This ETF provides exposure to international developed market stocks in Canada, Europe, Asia, and Australia. This ETF has $108.4 billion in assets under management, an expense ratio of 0.05%, and average annual returns of 5.4% over the last 10 years. Now it's time for the top 5. Coming in at number 5, we have the Invesco QQQ Trust, ticker symbol QQQ. This ETF tracks the performance of the NASDAQ 100 Index, which is a benchmark of the largest 100 non-financial companies listed on the NASDAQ stock exchange. Here's a look at the top 10 holdings of the ETF. While you take a look, this ETF has $161.3 billion in assets under management, an expense ratio of 0.2%, and an average annual return of 17.1% over the last 10 years. At number 4, we have my personal favorite ETF. It's the Vanguard S&P 500 ETF, ticker symbol VOO. This ETF tracks the performance of the S&P 500 Index, which is a benchmark of the largest 500 publicly traded companies in the U.S. VOO has $286.6 billion in assets under management, an expense ratio of 0.03%, and average annual returns of 12.5% over the last 10 years. Number 3 is another Vanguard ETF. It's their Total Stock Market ETF, ticker symbol VTI. This ETF provides exposure to the entire U.S. stock market, including large, mid, and small cap stocks. This ETF has $289 billion in assets under management. It also has an expense ratio of 0.03% and average annual returns of 12.2% over the last 10 years. All right, we're almost at number 1. Coming in second is the iShares Core S&P 500 ETF, ticker symbol IVV. This ETF also tracks the S&P 500 index and has the same expense ratio as VOO, as well as similar returns. But with $300.2 billion in assets under management, this ETF is slightly more popular. Let's take a look at the top holdings of IVV. It's really hard not to like any ETF that tracks the S&P 500. Speaking of which, we're on to number 1. Can you guess? That's right, it's another S&P 500 ETF. This one's the Spider S&P 500 ETF Trust, ticker symbol SPY. This ETF's expense ratio is a bit higher than the other two at 0.09%, but with $363.2 billion in assets under management, this ETF is highly liquid, making it very popular among traders, which is why it's number 1. There you have it, the top 10 ETFs. Whether you're a seasoned investor or just starting out, there's an ETF that can help you achieve your investment goals. ETFs are a popular and effective way for investors to gain diversified exposure to the stock market. With their low fees, simplicity, and liquidity, ETFs are a great choice for investors who want to build a well-diversified portfolio. However, it's important to choose the right fund that aligns with your investment goals and risk tolerance. If you want to see which ETFs I would choose, be sure to check out my video about building a portfolio from scratch. Last thing before I go. In case you didn't know, I have a daily newsletter. It's completely free and you get market updates to your inbox every single day. When you sign up, I'll send you a budget spreadsheet and a net worth tracker completely free. There's also a paid version of the newsletter if you want to support my work, but no pressure. Start with the free version and get some free stuff. Links down below. Alright, if you like this video, be sure to hit that like button and subscribe to the channel. Let me know your thoughts in the comments and what your favorite ETFs are. That's it for today. Until next time, investors.